Did you know that 72% of Americans spend more than they earn each year? That means a staggering majority are hurtling towards a future of debt, dependence, and dwindling dreams. As prices go up, interest rates rise, and people worry about a possible recession, lots of folks are really stressed about what it means for their money and jobs. But wait, is everyone forgetting something important? Actually, when the economy isn't doing so well, it can be a great time to make a lot of money. It's kind of like a rare chance that doesn't come around often. Still not sure? Think about rich people. Do they usually complain about tough times in the economy? Not really. When things aren't going well for the economy, they often make even more money. Even Warren Buffett, a famous investor, agrees with this. So, who's actually doing well in this economy? Take a look at this chart of the S&P 500's returns in bull and bear market. Did you notice any patterns? Every crash in the stock market was followed by an even stronger recovery. Believe me when I tell you that there are a lot of smart investment decisions that could help you build wealth, even in the difficult economic climate we currently find ourselves in. Let's take a closer look at some of the things that are predicted to unfold in the next 3 to 6 months, along with the promising opportunities at hand. You might want to pay close attention because the things you hear next are all you will need to strategically position yourself for the creation of lasting wealth.
Well, I don't think there's a particular risk in the economy over time. We will have recessions from time to time. And we had a real doozy in the fall of 2008 and early 2009. And that has had more consequences than other recessions have had post-World War II. But the American economy is a wonderful machine. It really works. It's worked since 1776, and it'll continue to work. But we will continue to have up.
If you're finding value in this video, hit the subscribe button. Let's start with real estate. Different places have different real estate markets, and some areas always seem to do well no matter what's happening with the economy. It's not very common for house prices all across the country to drop by a lot. In the last 60 years, there have been only a few times when home prices fell a crazy amount, like more than 15%. Right now, experts on Wall Street think that house prices might go down by about 10%, but if interest rates keep going up, they might drop by 10% to 25%. It's important to remember that real estate markets are different in different places. Some places, like Florida, Arizona, Idaho, and Southern California, might see their prices go down by as much as 30% from their highest point. This might last for about 2 years before things get stable again. For most people who already own a home and have a fixed-rate mortgage, these changes might not affect them too much if they're planning to stay in their home for the next 5 to 10 years. But for those looking to invest in property or buy a new home, now might be a good time. We'll talk more about that in a bit. Now, let's talk about cash. Usually, having a lot of cash isn't seen as the best thing because its value tends to go down compared to the cost of things over time. But when other things like houses or stocks aren't doing well, cash becomes a safe way to keep your money safe. It's smart to have some money set aside for emergencies, just in case something unexpected happens, like losing your job. It's good to have enough money saved to cover your expenses for 3 to 6 months. That includes things like rent, bills, food, and medicine. In 2018, something surprising happened. Having cash became a really good thing. People who saved money in high-interest bank accounts actually did better than those who put money in other places like the stock market. Right now, a lot of big money managers are holding on to more cash than they have in a long time. They're doing this because they think it's a good way to protect their money during tough times like a recession. During tough economic times, something else that tends to do well is gold. When everything else, like stocks, isn't doing so great, gold tends to go up in value. It happened in the 70s, in 2002, and in 2008. Some people think of gold as a safe choice when things get rough because it doesn't rely on how well the government is doing. But here's the catch. While gold might be good for tough times, it's not necessarily the best thing to invest in for the long haul.
Instead, you'd use the $10,000 to buy gold. Now, for your $10,000, you would have been able to buy about 300 ounces of gold. And while the businesses were reinvesting in more plants and new inventions came along, you would go down every year look in your safe deposit box, and you'd have your 100 ounces of gold, and you could look at it, and you could fondle it, and you could, whatever you wanted to do with it. But it didn't produce anything. It was never going to produce anything.
A big-time investor called the Oracle of Omaha once said that gold doesn't really do anything. It just sits there. So, while it might be good in the short term, it's not great for making more money over a long time. Now, let's talk about stocks. Lately, the big stock market numbers have been going down quite a bit, like around 15% to 30%. Some experts even think they might drop another 20%. But history tells us that during tough times, the stock market usually drops by around 30%. The worst drop happened in 2009 when it went down by more than half. But here's a cool thing. When everyone seems to give up on the stock market, that's often when it starts to recover. So, even though things look bad, it might be a good time to think about when things will start getting better again. When things go down, it's not all bad news.
When stocks go down, it's good news, just like when hamburgers go down, it's good news, or Coca-Cola goes down, it's good news.
In fact, this upcoming tough time might be your ticket to building a lot of wealth. First off, when big companies struggle, it's like they're taking a break. They might cut back on stuff or even shut down. But this is where smaller businesses can shine. They can step in and show what they're made of when the big guys are pulling back. Some studies even say that smaller companies that keep advertising during tough times end up doing really well later on. Secondly, when the economy isn't doing so great, things become cheaper. Imagine a fancy thing that usually costs $100. When times are tough, you might find it for only $50. That's a big discount, especially for people who want to invest. Even super successful investors like Warren Buffett love buying things when prices drop. They know it's a great chance to make more money. Third, after things go really low, they usually bounce back up. Think of it like a roller coaster. The stock market, for example, might drop by about 30%, but after hitting rock bottom, it often jumps back up by a lot. So, if you're in the game for the long run, sticking around during the tough times might help you make a lot more money. Fourth, tough times act like a filter in the business world. The biggest, strongest companies might look like kings at the top, but when things get tough, even they struggle. It's like a jungle where the smaller ones have a chance to grow and shine. When things start looking up again, newer, smaller companies can become big players too. Finally, don't wait around for someone to tell you when the tough times officially start. Sometimes, it takes a while for everyone to agree that things are bad. So, instead of waiting, it's better to start thinking and acting before things get really tough. That way, you can be ready to make the most of the opportunities when they come. When tough times might be on the way, here are some smart moves to make. First off, it's good to keep some cash on hand. Even though it's usually better to invest your money, having cash saved up gives you security. It means you're ready to grab a good investment opportunity if it shows up. Having around 15 to 20% of your money as cash can be a smart move. Secondly, it's smart to cut down on how much you spend. When things start looking uncertain, spending less can really help you out. Making smart choices with your money, like keeping a close eye on what you spend and making a budget that works for you, is a good idea. Planning ahead and having a strategy for managing your money can be a real lifesaver if your income takes a hit because of tough times, or, worst case scenario, if you lose your job. Speaking of losing jobs, it's a good idea to try and make sure you keep yours. If you end up selling your investments because you lost your job, it could set you back financially, and that's something you'd want to avoid, especially during an economic downturn. When companies start laying off people, they usually pick the ones they think they can do without. So, it's super important to keep growing your skills. Learn new things and show your bosses that you're valuable to the company. That way, when they're deciding who stays and who goes, you've got a better chance of sticking around. Now, on to number 4, spreading out your investments. This is like having a safety net. Mix up what you invest in. Stuff like big company stocks, stocks from other countries, or things like real estate or things that make money on their own. We've got some cool videos on businesses that can make you a lot of money without you doing much. The more different kinds of investments you have, the safer your money is if some of them don't do so well. And lastly, Think long-term when you're investing. Remember that guy Warren Buffett? He says, even if things look weird in the economy, keep investing like you always do. Investing a bit regularly or spreading out your investments over time has usually worked out well, and over a long time, the market usually gets back up even after going down. Here's something cool to think about. If you put $1,000 into TSLA stock 10 years ago, today that money would be worth $116,000. That's what happens when you keep your money in investments for a long time. To discover more financial insights, especially from other financial experts like Warren Buffett, check out the video on your screen. Keep learning with us. Thank you for joining us. Until we meet again, start small, think big, and stay financially enlightened as you build your future.